In this topic, we're going to be looking at types of bank accounts. Now, at the top of the page here, it says circle the services that meet your own needs. So, this section could actually be different for everyone. I'm going to do it for my own needs. So, I think online banking is the new generation thing. I don't like having to call in to pay my bills or go to the bank in person to pay my bills. So, I do it all online. So, that's definitely a need that I have. Monthly interest, I don't like paying monthly interest, so that's not a need of mine. Unlimited ATM use, I don't really need unlimited. I barely go to the ATM because I don't really deposit any cash or checks. And if I do deposit checks, there's actually a feature on your phone where you can take a picture of it and it'll deposit it from the picture. Line of credit, I don't need right now either. I don't need any big loans. Check writing is iffy. Sometimes I need checks and sometimes I don't. I'm kind of looking at getting a house right now or a condo, and you do need to give a deposit with a check. So that's something I'm kind of interested in. But a safety deposit box is something I use right now because my grandma gave me some family jewelry that she's passed down for generations. So I'm definitely keeping that in a safety deposit box in case anyone breaks into my house and they want to steal them, they can't. So those are which ones apply to me. Now let's look at the different types of accounts that banks offer. So they have checking accounts, savings accounts, and tax-free savings accounts. So checking accounts are best used for day-to-day banking, including debit card purchases, check writing, pre-authorized payments, and so on. Now a savings account focuses on saving money. So you barely use the money that's in that account. If you ever put money in that account, it's meant to stay in there for a very long time. Now, because of that, it is a good thing because it earns a lot of interest. Whatever money you have sitting in there, the bank will pay you more money the longer it sits in there based on the amount you have in there and how long it is in that account. However, let's say you really need to take out some money from there. Well, the downfall is that it has a high service charge for withdrawals. So if you want to take out money, it's going to cost you. However, if you want a savings account that doesn't cost you that much money when you take out money, it would be a tax-free savings account, and that's something that I have. So it is a savings account. I put most of my money in there and just keep enough in my checking account to pay bills and my rent and stuff. But no income tax is paid on the earnings. However, with this tax-free savings account, you don't get a lot of interest from it or having money in it. I barely make any interest on my tax-free savings account. However, I do dip into it sometimes. So the benefit is that it doesn't cost me any money to take money out of that account. So let's look at what decision Bella should make about the type of account to use. So for daily purchases with a debit card, definitely use a checking account. Checking accounts are the ones that are constantly having money come in and out of them to pay bills or pay groceries or so on. Now, to get canceled checks, use a checking account as well. To save money from each paycheck, use a savings account. And to save $400 a month to buy a house in 5 years, use a tax free savings account. And the reason you would use a tax free one here is because you're going to be planning on taking that money out in 5 years. That's kind of like what I'm doing right now. I'm looking at buying a house and I need a down payment for it. So if you were to use a regular savings account, it would cost you a lot of money to take that money out in 5 years. Those ones are for more long term investing or long term saving. So, if you're planning on using that money within 5 years, definitely do a tax free savings account. Now let's look at example one. Tegan is a set designer. In a typical month, she makes 16 transactions. She keeps a minimum monthly balance of $650. So I'm just going to highlight a couple things here. Which checking account should she choose? Explain. So we have a few different accounts. We have a low fee account, a value account, an unlimited account, and a student account. So you could see the different monthly fees for each of them. There is no fee with a minimum balance of these specific numbers here. So if you have $1,000 in this account, then there will be no fee for that. And then it says the number of transactions included per month. So some of them you're only allowed to do 10 transactions, some of them 25, but these ones you have no limit on your transactions. And having no limit for me is very important because I use my debit card for everything. And then additional transaction fee. So if you were to go over these 10 transactions, say you did 11 or 12, you would have to pay 65 cents for each of those additional transactions per month. So below we have some fill in the blanks. It says, what are her typical value account costs per month? So value account, we're looking at this column right here. So Tegan makes 16 transactions a month. That's what it says right at the top, right by my star. This is less than the 25 transactions included in the fee, because right here it says it includes 25 transactions. So therefore, the cost is only the monthly fee, which is $8.95. So let's begin by comparing what the cost of using a value account would be. So value account, that's this one. It says Tegan makes blank transactions in a month. And if you remember up here, it is 16 a month. So this value account lets you do 25 transactions in a month. So I'm just going to put a 25 here before you have to pay extra for any additional transactions. So since she only does 16 transactions a month, she'll never have to pay the additional transaction fee. Therefore, the only cost that she has is the monthly fee, which is $8.95. Next, let's look at the low fee account. So that's the first column right there. So the monthly fee for that account is $3.95. So that's cheaper than the value account. But this account includes only 10 transactions. So she does 16 transactions. Therefore, she's going to have to pay that additional transaction fee for 6 of those transactions, right? Because you're allowed 10 with the low fee account. So I just did 16 minus 10. So she has 6 transactions, which she'd have to pay that 65-cent fee for. So then what we're going to do here is we're going to do 6 transactions times 65 cents per transaction, which is equal to $3.90. So that's going to be added onto her total cost. So the total cost for this one would be the monthly fee, which is $3.95 plus the $3.90 for all those additional transactions she does. So in total, the cost would be $7.85. So now let's compare these two. Should she choose the value or the low fee account? Describe the key features of the suggested account. So if we're comparing the costs, this one would cost her $8.95 a month, and this one would cost her $7.85 a month. So I think that she should choose the low fee account, and I will write why. So I just wrote here that she should choose the low fee account because it has a low monthly fee and a low minimum balance. Because remember, if we look up here, it will actually not charge her a monthly fee if she's able to get $1,000 in her account. She's very close with the $650 that she has. So maybe some months she wouldn't even have to pay that monthly fee. And then she would only have to pay for those additional transactions. So overall, it would just be the cheaper option for her. Now, in Part D, it says, should Tegan consider the unlimited account or the student account? Explain. If we're looking at the top here between unlimited account and student account, well, the thing with a student account is that you need to be a student in order to use one, and nowhere does it say that she is a student. It actually says that she is a set designer, so she wouldn't even be able to use the student account. So I'm just going to write that down here. So I just put that she should do the unlimited account if she had to choose between these two, because she can't even open a student account. She is not a student. Now, remember, your answers for C and D are all personal preference, so you could have had a different response for each of these and reasoning why, and it could be correct. Now, in example 2, Tyler has $2,500 in his savings account on September 1st. He deposits $500 on September 11th and withdraws $200 on September 15th. The interest rate is 1.2% compounded daily. Let's highlight that. On the daily closing balance. The interest is calculated daily and paid monthly. How much interest will Tyler earn by October 1st? So there's a few calculations we have to do for this, so let's take it one step at a time. So Tyler has $2,500 in his account on September 1st. So his initial balance is $2,500. Now this balance remains in there until September 11th, where he deposits $500 more. So the number of days that the $2,500 is in his account is 10 days because from September 1st to the 11th, that is 10 days. So let's calculate the interest on that. So our principal amount is $2,500. Then we have the interest rate up here, which is 12%. Then we have the interest rate up here, which is 1.2%, and it's compounded daily. That's what we highlighted. That's why we have the 365 down there. And it's in there for 10 days, so that power is 10 because that's the amount of times it would be compounded during those 10 days. So then if we plug this into our calculator, we will get $2,500.82. And if we calculate the interest earned from that, it would just be 82 cents. So that would be the amount that we just calculated here minus the initial amount or the principal. So now let's add on that $500 on September 11th. So he deposits $500. So now his balance would be $2,500 plus 500, which is $3,000. So that's his new balance. And if we look at the next time he does a deposit or a withdraw, it's on September 15th. So this $3,000 is going to be in his account for 4 days because from September 11th to the 15th, it is 4 days. So now we have the amount of $3,000. We have the 1 here, we have the 1.2% interest rate, and divided by 365, and this time our little exponent will be a 4 because it's in there for 4 days. So once we calculate this amount, it will be $3,000.39. So the interest he earned was 39 cents this time. I'm just going to write up here that the interest is the amount minus the principal. Okay, so now he withdraws $200. That's our next step, withdrawing $200. So we're going to do $3,000 minus $200. So then we would be left with $2,800 in our account. Now, this amount will be in there until October 1st, or that's like the last date that they're giving us for the question. So if we're calculating the days from September 15th to October 1st, we have to count the amount of days in September. So we're going to have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, and one more would be 16 to October 1st. So I'm going to put the number of days as 16. So then we're going to have $2,800 as our principal. The interest rate still the same, the 365 still the same, but this time it's in there for 16 days. So then if we plug this in our calculator, you should get $2,801.47. So the interest earned this time is $1.47. So if we calculate all of the interest earned for the month, we would just add up these three numbers and you should get $2.68. So this is the amount of interest he will earn just by using a savings account for the month of September. So this is just free money that they gave him just for having money in his savings account.